Okay. Hi, I'm Peter Rose, founder of Longwood Currency Trading. The when of Forex trading that no one talks about. Give you an example. What I always say, or you've heard me say, I'm pretty good at understanding what the market is going to do, and I know how to solve that problem. It's as simple as, do I make this entry? And the reason I would go in to make that entry is because I think there's a probabilistic, a high probability that the price will go to where I think it's going to go. I mean, that's how you trade, right? You're putting a bet on a probabilistic determination that you have. I believe, based on what I know, whether that's macroeconomics or order flow, general 50-50 jump ball trading, whatever the magic juju is that you have, that you make the decision to enter the trade. The idea there is that you're expecting that the position will go from where you're entering to where you want it to go. So you know what it's going to do, or what it should do from a probabilistic standpoint, and you know how to deal with that to squeeze it for the most amount of end profit. But what you don't know is when it's going to do that. And though you can have a probabilistic estimation of that, it's so far out on the end of the tails, and they're not even fat tails on this curve. You can know what something's going to do, but you don't know when it's going to do that. It's very similar to, if you know anything about physics, or if you don't, it's called the Heisenberg uncertainty principle. Look it up. You can know where something is, but you don't know how fast it's going, or you know exactly how fast it's going, but you don't know where it is. There's a quantum mechanical, mathematical, probabilistic characteristic to the world and all its component parts that are part of that Heisenberg uncertainty principle. And this aspect of trading is one of them. You can know exactly what it's going to do, but you don't know when it's going to happen. In trading, we look at that entry and where it's going to get as the primary thing that you see on all these videos. Well, if this condition is solved, and I talk about that myself, maybe, you know, blah, 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 all these conditions for the what are solved, and so I enter the trade. But the component that I also bring to the table, that I share with students, is the when. How do you probabilistically determine when that event is going to occur? What is the probability that you know that that's going to occur? And I tell you my good stuff as well as the bad stuff. I had a really good couple of days of trading, and I was hitting pretty well. I had a really good sense for the direction, bias of price at that time. There were economic conditions that in the two pair countries that were promoting continued movement in that space. Now, I'm not looking for 100 pips. I'm just looking for, 10, 20 pips, hop it out in a day, and I'm okay. And I put that trade on, and it started going in my favor, and I added to it. I added aggressively to it, and all of a sudden, this is early in the morning, and all of a sudden, I'm like $10,000 down on the trade. I mean, it just went like that. I didn't have a stop on because I'm building the trade and I'm managing the position and all that kind of stuff, and so you can poop it or whatever. When I'm teaching people to do stuff, it's an all-in, all-out process. As soon as you put that trade on with your 3 lots or your 3 minis or whatever you're doing, you put a stop on it, and that's it. There's no questions about that. When I trade all-in, all-out, I put the stop on, and there's no question about it. But after the trade is put on, and I have a stop, and that price begins moving in my direction, I'm now building into the position by adding lots, and then as it goes beyond a certain boundary condition of price action, Now I'm starting to stage into that position. And that's where this trade had been to. And I'm managing all that, and I take the stop off because the rules of stop change when you're actually trading. And you have risk management processes. I have risk management processes that I teach as you're doing that staging and building. But because on this particular trade, I wasn't looking for a long run. I wasn't looking for the thing to get 30 or 40 pips so that I could grab maybe a third or a third or maybe 40% of those pips, 10 pips, 12, 15 pips. I was just trying for the quick run to the 15, 20 pip line. I need to let that position move around as it stabilizes, because when price is moving in a direction, 50% of the people are going to be wrong. And so they're going to be cashing out of that position as more people buy. But as they cash out, the price retracts. So you can't have a 5 or 10 or 15 pip stop as you're doing all this lot manipulation. You're not going to learn anything by me talking about it. That's what I do when I'm working with a student. That's why I get paid the big bucks, is because I talk about stuff like this and I show people how to do stuff like this. In any event, when you get it wrong, in other words, the when component, it can go really badly against you. So my when was, this should go fine. And it should go within this time frame, within the couple hours that I'm going to trade. And so I felt comfortable loading onto the position. So it goes psst, way against me. It was a spike. I figured, well, it's got to come back because that's an unnatural spike. There were more people that were getting out of their bad positions, recognizing that they had taken enough heat, and that's what caused the retracement in that position. So I'm just going to sit through that. And in fact, it did come back and settled in so that my loss on the particular trade was, I might have had a 5 pip loss overall or something like that, 8 pips. And I was fine. But I was loaded in pretty heavy. So that position just kind of meandered around, and it just stayed there. And so I stayed with the position thinking, well, maybe I'm going to have to hold this until the close of business today. And then it went 12 pips against me. Then it went 15. And I'm saying, oh, man, I got a big load on this thing. I mean, I'm trading a 6-figure account, so I'm not trading it at 20 or 30 bucks a pip here. This is my real estate brain taking a hold of me. If you watched, I think it was my last video, I talked a lot about my 40 years of experience in real estate, and that once you buy a piece of property, you hold it, regardless of the fluctuations or whether your net value goes to zero. As long as your mortgage is not underwater, you can hold that asset. And I've gone through that a couple of times in my life with my real estate. I've lost $1 million twice in my life because of the economic collapses, but I never lost the properties because I didn't use excessive leverage. And so I made the $1 million back each time, but it took 10 years each time. So I didn't know when the property was going to end up. Well, I had one property, for example, I closed out of several years ago that I had bought for $73,000. I sold it for $600,000, and that was after 30 years, and that was after it going to a zero value from the standpoint of equity twice. So, you can't bring that into the currency market because the order flow isn't based on the same thing that real estate is. But I've got 40 years of that DNA in me. So the fact the thing goes 20 pips against me and I'm on a 12 lot. I mean, losing $10,000 to me is nothing. And it is nothing when you have a 6-figure account. So you couple that with this real estate DNA problem, and I just say, well, it's got to turn around because the macroeconomics say it should, the news says it should, the interest rate policies of the two-pair countries say that it should. I say that it should because I picked the direction of the trade. All this crazy shit that goes on in your head. And all of a sudden, I'm 12,000 bucks down. So I'm sitting here with this trade and I'm thinking, this just is stupid. It just shouldn't be there. In managing that position, I felt that at the $8,000 level of negative position value, I was still okay. But now it hit around 12,000. I'm thinking about pulling the plug on the thing. And I'm looking at the macro picture of the thing. I've been trading a long time. I said 40 years in real estate. I traded options for 4 years, stock options for 4 years. I've been looking at the currency market since 2007. This is late June of 2024. So I've been looking at currency markets for a little while. And I've actively been trading them since 2012. Again, this is 2024. I have a broader picture of what most guys with a couple of years of trading or 6 months of trading have. And as a result of that, I trade differently than how I teach. I teach people how to get consistent so that they can then understand how to push the pedal to the floor and make 60-80% on their bank a year. Whether that's achievable or not, that's totally up to you. But because I'm not trading because I need the money or I'm trying to increase my net worth, I'm a millionaire, retired a millionaire from real estate. I'm having fun. So what I'm doing is not what I'm teaching, and generally not what I'm talking about when I discuss my trading on the videos. I'm trading according to the rules that I would teach someone else. But there are many trades that I make where I go, okay, I think this is a time when I could go in and make this happen. There was a big trade that I lost a couple of years ago. That's $24,000 that I lost on one trade, one position, and I just thought that was stupid. I shouldn't have held it quite as long as I did. I've got it right this time. The conditions have changed. The price has now moved around. I'm going back in. I don't have any fear of trading. I trade with no fear. And I made $26,000 that day. So I can, when a thing is really going, I'm stuttering here. When the action of the price matches my perception of the probabilities, I throw it all against it. I'm all in there. Sometimes I'll lose, like I did that time. I lost $24,000. I got it wrong. But the when was wrong. So all of a sudden, that picture changed. The when, I go, this is it. And I went all in. So I made $26,000. You can't determine the when. That's the difficult part. But see, nobody out there is talking about that when component. Any dumb fool can teach you what to do. Any fool can teach you how to do it. Oh, here's a Bollinger Band and this is how you use it. But it's stupid to even think about doing that because you don't know how to trade. You can't abrogate your responsibility as a trader to an RSI or a Golden Cross or a London Open or a Bollinger Band. That's not trading. And those are not helpful indicators. I don't use any of that stuff. I have moving average lines and some support and resistance levels. That's all I use, just to give me an idea of what's happening with order flow. I trade order flow, not Bollinger Bands. And so there I am, sitting with this $12,000 loss on this position, and I am convinced that the when will occur. I don't know when, but it just shouldn't be, price just shouldn't be where it is. I got up, I carried the trade over to the next day, came downstairs, opened the trading platform up. There I was. It was still, it was about $11,000. It was a going back and forth between $12,000 and $10,000. I mean, I'm carrying a heavy load, so it doesn't take much to go a couple of $1,000. So it was just still there when I opened the trading platform in the morning, and I had checked it during the night, and it was holding pretty steady. So okay, so I'm sitting at my desk. Let's go in and get a cup of coffee, and we'll get on with the day. This is like, wasn't early morning. It was probably 8:15, 8:20, something like that. I'm East Coast U.S. time. So I go out and get a cup of coffee, bring it back. I'm stirring my cream, and I look at the chart, and there was this enormous spike in the price. And I had gone from a $12,000 loss to a $3,400 loss. I grabbed the button and went, psh, close all, done. If I wouldn't have closed it right then for the $3,400 loss, it would have gone back up to $4,500 and back to $3,200. It would have vibrated there because the price had moved so far, 70 pips or something like that. Yeah, but probably 70 pips, that there had to be a retraction to that, even though it was in the wrong direction to where I thought price should go. I got the when component wrong. I suffered with it. The skies parted. There was my opportunity, and I got out. So I took a $3,400 loss on that particular trade, which isn't a really big loss against a six-figure account. But it just hammers home the fact that if you don't get the when component right and it's moving against you, you have to get out. You just have to get out because the market is right. You're not right. And so trading is not what to do or how to do it. It's, well, when do you make that decision? If I'm going to grow a garden, I know what to do. I've got a shovel. I know how to use the shovel. I know how to put the seeds in there. I know how to water. I know how to do all that stuff and what the tools are. But if I try to plant that garden, build that garden and plant it in the winter, I get the when component wrong. It's not going to work. You have to know when to do stuff. When you're trading all in and all out and you're learning how to trade, you don't need to worry about the when component because the rules that I teach allow you with a good win to loss ratio to be wrong 4 times and right 6 times so that in the overall specter of things you win twice. And when you win and you get it right and things are moving in your favor, you load the position on and you make a lot of money. So even a 60-40 trader can get a 40% return on their money if they know what they're doing. But when you start breaking your bank lot size up into building and staging, you're doing compounding, you're all this other stuff, now the win component becomes critical. Because most of these guys that you're watching on the videos made their money trading at 200, and many of them are trading at 500 to 1 leverage. Do you realize that if you had a $10,000 or $20,000 account trading at $400 or $500 a pip, that you could get to 6 figures out of a $20,000 account? You'd get to a 6-figure account in maybe 8 wins in a row. 8 lucky wins. Statistically, you're going to hit 6 losers in a row. If you trade 100 times, you have a very high probability within 100 trades that you're going to hit 6 losers in a row. We'll flip that around. Within 100 trades, you're going to get 6 winners in a row, 8 winners in a row. So you trade at 500 to 1. You lose your account, you lose your account, you lose your account. All of a sudden, boom, now you've got 6 figures. Do that 2 more times with the 6 figures and you got $1 million. Do you know how to trade? No, you got lucky. It's like the guy runs through the minefield. He gets to the other side, and he tells people, oh, I got through the minefield. I know how to get through a minefield. Come on. Everybody else gets killed. Doesn't bother him. If you don't understand the when component, if nobody's teaching you that, you best go and buy some real estate or trade old tires or something like that, because currencies is not what you should be doing, because the when component is the all-important component of your trading. It's not like the stock market or futures or whatever like that. I don't trade stocks, I don't trade options, I don't trade futures, I don't trade commodities, and the reason I don't trade them, you can go to my website, longwoodcurrencytrading.com, to the currency trading page, and there are 7 reasons why I don't trade any of that crap and why I trade currencies. However, I understand the when component, but I don't see anybody else out there that does. So be very, very careful. What do you need to know? How do you use what you know? And when do you use it? If you can't answer those 3 questions, not just the 2, but the 3, then you shouldn't be trading currencies. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.